welcome to Leaders of Tomorrow, ET Now's special initiative that celebrates the undying entrepreneurial spirit of micro, small and medium enterprises. On the show today on Bright Sparks, we feature OYO Rooms, the rooms aggregator, which is on an expansion spree. We also feature ZipGo, which is making public transport convenient and fun again. And on our Inside segment tonight, a special chat with the team of TeamLease. So that's what we have in store for you tonight. Let's start off right away with our Bright Sparks features. On Bright Sparks today, we have OYO Rooms, a company that has changed the face of the Indian hospitality industry and enhanced affordability of hotel rooms for the middle class. It presently has the biggest chunk of market share across budget hotels and occupancy rates as well nationally. The rooms aggregator, in fact, is on an expansion spree and is already going international with a strong brand presence in Malaysia. Punita Verma takes a look.
Online platforms for budget hotels in India have been making waves, but it was the entry of OYO Rooms in 2012 that revolutionized this space. Within a span of 4 years, this online budget hotel aggregator has managed to rope in 10,000 hotels in 170 cities. Launched by 21-year-old Ritesh Agarwal, OYO transformed the online hotel industry space by its two-pronged strategy, raising the occupancy levels of the rooms and slashing the tariff rates like never before. Well, you are one of the youngest entrepreneurs in the country and you're sitting atop one of the most successful ventures in the hotel industry. So how did such a young entrepreneur change the face of the hotels industry?
I grew up in the southern half of Orissa. As a young kid, would sell SIM cards, FMCG products and so on. Would love doing that. Like so many other kids go to Kota, Rajasthan for potentially becoming engineers, I went there. Got disillusioned in 7 to 8 months like so many other kids do. Post that, of course, started Oravel, which was more like an open marketplace where people could come and buy and sell accommodations. In that period, realized that the bigger problem existed in predictability of accommodations. And that happened when I spent close to 3 months every day staying in a new bed and breakfast, serviced apartment, guest house, and so on and so forth. So it's almost like a story of having that clear mission of solving a problem. And then once you have that and once you can put all your life behind solving that problem, one thing leads to another and you reach there.
OYO has been providing some of the greatest discounts ever on its room offerings. How are you managing to register profits despite offering these discounts which are unprecedented in the industry so far?
Our last quarter announcement mentioned that we had booked 2.3 million room nights and operated at a profitable unit economics. That there is a massive difference between discount and the list price. Our belief is our list price in itself is so low that it makes you feel like there is a discount attached behind it. That OYO not only today, but in all the times to come, will always be at least 30% cheaper than not only any hotel, but any player selling rooms in that market.
The concept of OYO has attracted several investors, the largest of them being SoftBank, which invested $100 million recently. The company has a valuation of $225 million backed by investments from reputed venture capitalists like Lightspeed, Sequoia and many others. Well, your pace of expansion is almost supersonic, and when you grow at such a fast pace, there are issues of integration into the system and there's a possibility of failure if you do not maintain your quality very well. How are you maintaining this delicate balance between quality and expansion?
The last quarter, we put back all our stakes on ensuring that every dollar of investment this company does has to be only on experience. On which, for example, we replaced our toiletries in the past from OYO branded toiletries to going to possibly among the most expensive formats of saying we will have biotique toiletries. We removed close to 51 hotels, like shut them down out of our network, who were delivering not so great experiences in our broader scheme of things. So as a combination of all of this, our belief is in the last 3 to 4 months, not only have we continued to maintain, but we have upped the game.
So you and a lot of your competitors started out at the same time and grew in the same market conditions as well. So how did you manage to outgrow your competitors, beat the competition and maintain an edge as well?
We were able to zoom past everyone else and reach the scale we have. And the primary reasons of that entails first learnings of the first year and a half. And because it's such a complicated industry, those learnings are extremely valuable. The second one was edge in terms of demand and brand. By the time everyone started, OYO is today a known brand for the last mile customer who's going to book a hotel versus anyone else. So a lot of these were our edge, which is why we are here. Of course, the core part of all of this was just the quality of team.
So apart from being a hotel's room aggregator and giving visibility to budget hotels as well, what other roles have you played to the benefit of the consumer and the hotel partners as well?
We have done some exceptional investments. For example, to hotels, we have a special portal where the owners can essentially buy everything from TVs to DTHs to toiletries to linen at the cheapest price in the market. We support them by means of capital. So we have financing partners who enable to give loans to hotels on the basis of OYO's partnership.
Ritesh Agarwal dropped out of college at the age of 17 to launch OYO Rooms. With an aim to make hotel stays pocket-friendly along with providing a satisfying experience to its customers, Ritesh is all set to create a model that will be followed by many.
With Uber, Meru and Ola cabs all fighting for a piece of a common pie and going all out to make cab rides more affordable and attractive, public transport on its part is the one losing out, and one company that's making sure that people get hassle-free and quality bus services for their daily commute is ZipGo. With its cashless trips and seat reservation facilities, ZipGo now has over 100,000 downloads currently. Polami Mukhopadhyay caught up with its co-founder. Take a look.
Even as the number of vehicles on the roads are increasing, the cost of private transport is not coming down. One company that's aiming to address this issue, particularly as far as public transport is concerned, is Bengaluru-based startup ZipGo. ZipGo provides shuttle bus services in 4 major cities of India: Bengaluru, New Delhi, Mumbai and Jaipur. It offers air-conditioned private buses for hassle-free travel of passengers. Jitendra, what is the story behind your company name ZipGo?
Well, we want to provide a fast means of transportation for our users from point A to point B. So it's like a zip and go. You can, get to your destination faster. And we want to be the fastest mode to transport, people in the city.
Give us an idea about the kind of regulatory or reforms related challenges that you face in this kind of sector.
Yeah, so I think the government, both at central level and at many states, is very, very helpful and supportive. In the budget speech of 29th February, the Finance Minister, Mr. Jaitley, announced that they will modify the Central Motor Vehicles Act to allow, to create a framework for app-based aggregators for buses. So that was the first step towards, creating a regulatory framework for this. Essentially, this is a completely new sector. What we're doing in India has not been done ever, anywhere. In the West or developed economies like US or Europe, they have a very good public transport system, so they never needed something like, ZipGo. In India, on the other hand, we have only government-run bus services, which are not, very great. So what we're doing is completely new, which basically means that a lot of innovation has to come through us, in both in terms of technology as well as the operational, side of the business.
Are you not limiting your reach by using the business model of app only?
Correct. Great question. So I think for transportation business, I think app only makes a lot more sense than say for a fashion app, right? Because the discovery and the user experience for a fashion app may be much better on a desktop or a laptop. But for a transportation app, what you really need to get started is a location. So the GPS coordinates of where you are and how far is the nearest vehicle, whether it's a taxi or a bus. That's very important. And then the second part is the tracking. Once you have made a reservation on a particular vehicle, they need to know, is it going to be on time? If it is going to be late, how late it is going to be. So I think for transportation services, app only or app first is the right strategy. For us, we do have a website that supports our app only users for things like payments and looking at their history of rides and generating receipts at the end of the month. So we do have a website which supports, but we are an app first company right now.
Give us an idea about the women only bus services that you have started in New Delhi. Why are you restricting yourself to New Delhi only?
In women's safety, as we all can agree on, is a big issue in India, not only in Delhi but in other cities, major metros, every smaller towns as well. So Delhi started as a pilot and the response has been phenomenal. All our buses run at 100% occupancy. We can probably serve only 1/10 of the demand that we have in Delhi right now. So our goal is not to restrict to Delhi, but yes, that's another sort of a experiment that needs to fructify. We have to figure out the operational side of that business as well. So we do definitely plan to bring women-only service to other cities as well.
With the help of the ZipGo app, a passenger can easily choose a ride for its preferred location with just a click of a button. ZipGo not only promises timely service but allows a commuter to live track the vehicle to get an estimate of time. It allows a passenger to opt for the cashless service and assures guaranteed seats at 1/4 of the cost incurred for a cab ride.
Right now our customer app and the driver app both can work on 2G. At the same time, what we have done is for the driver app, it can actually work in an offline mode itself, wherein everything can be worked on just pure SMS.
Fundamentally, if you see in Bombay, there's a lot of pollution, traffic, people run on their own vehicles and they hate doing so. They don't have any choice because right now what exists as of now is either a best bus and then on the other side you have a taxi where you already have surge prices which people can't afford day on day. So our product is somewhere in between, which essentially gives all the comfort to consumer in terms of a guaranteed seat, AC service, you know when your ride is coming so you can track, you need not wait at the stop, so there is clarity and transparency to the consumer, and it comes all at a price which is 1/4 of the price of a taxi.
Passengers are now choosing private transport over public ones for better quality, on-time service and comfortable journey. So what makes players like ZipGo tick?
I've been using ZipGo for the last 3 weeks and it's really boon in a city like Mumbai. It's really taken off a lot of stress of drive time, etc.
Best part about this service is that they provide me guaranteed seats, air conditioned environment, and I have convenience to book it through an app.
With the announcement of smart cities in India, smarter commute is the need of the hour. Keeping in mind the increase in traffic congestion and pollution in cities, ZipGo has arrived as a game changer in the Indian transport market. Clocking over 100,000 downloads of its app, ZipGo has been successful in getting a green signal from its users.
All right, let's take a quick break then. On the other side, we'll get you a conversation with TeamLease, which has just gone public. What has the journey been like? We'll get you that story on the other side. Just stay tuned. Welcome back to Leaders of Tomorrow. I caught up with the management of TeamLease, the temporary staffing company, about going the public route, what the experience has been like and what advice they would have for hiring and retaining staff and much more. Here's a chat with Ashok Reddy, co-founder of TeamLease. Thank you so much for speaking with us on ET Now, Ashok. Let's kick this conversation off by asking you what your recent experience has been like of going public.
Well, I think we were the first company in this space to have gone to the public markets. Obviously, with that comes an element of recognition, not just for the company, but also for the industry sector per se. And the reality that we had over a 66 times oversubscription puts a huge element of expectation on us and on the company. And I think that's really what we are focusing on now in saying hunker down and focus on the future deliverables.
So then what advice and learnings would you have to share with fellow entrepreneurs and fellow MSME entrepreneurs who are really watching this show in terms of what it has taken you to go public?
I think going public is a stage in the life of a company. It's not the end result. And obviously, multiple things go to making a successful IPO. Obviously, the opportunity, size of the opportunity for the company, the past performance, the perception, all of these matter. But I think for anybody going public, I would clearly look at saying that maintaining the hygiene in the company, financial control, regulatory compliances, and having a strong team that has delivered in the past and can deliver to the future is a very important variable. So building that over the years, building the track record and being prepared for the market opportunity becomes very essential for companies to play out to the IPO route.
Can you share with us some broad trends in terms of what industry sentiment is really looking like when it comes to hiring?
So what we're seeing right now, there is hiring happening. There is a cautious optimism that is playing out on the employment front. We are seeing employment opportunities coming in from different industry segments. Obviously, e-commerce, startups, IT industry are key players on that front, but we are also seeing it from telecom, healthcare, hospitality. We are seeing it from FMCG. So I think across industry spectrums, there is an element of a cautious optimism that is playing out on the hiring front. So we do see demand coming in from various sectors, though a lot of this is also an element of what we tend to call fresher hiring that is kind of playing out. So I think the opportunities are clearly there in the market today.
Fair enough. Report after report really talks about how the new economy is hiring more aggressive than your traditional industries. Is this something that you think is going to last going forward, or do you expect that there could be some change in that hiring pattern?
If you really look at it, there'll always be new kids on the block in terms of various industry segments, and in a way that's good. Opening balance in terms of numbers for new industries or companies are always low, and by virtue of that, hirings that happen always in a percentage term seem very aggressive. But having said that, as a country, India is only growing younger by the year, is adding over 1 million people to the workforce every month and will continue to do so for the next 20 plus years. I think any industry, any sector that's hiring is good for the country, whether it comes from the new age industries, whether it comes from e-commerce startups, whether it comes from the manufacturing, FMCG, engineering firms, infrastructure. I think the fact that employment opportunities are there is really what we should be happy about. I think at least the element of hiring that's happening at this point, whether it be from the startups and the new age companies or from the aspect of the old economy companies, is playing for the good of the country.
Speaking of the new economy versus traditional industries, would you say the government's Make in India push has started resulting in large-scale hiring already as far as some of these manufacturing companies are concerned, or is that still a bit of a way off?
Not yet. I think optimism about the various soundbites that the government has, whether it's Skill India, Make in India, digitization of India, and all of those are really positive overall for the economy, but I think translation of all of those initiatives onto the ground is taking longer. And from that perspective, if we really look at it, we recently came out with an employment outlook report, which effectively has shown that the optimism that the manufacturing sector had towards Make in India and hence the translation into employment, which existed, for the past few quarters, has actually mellowed down a little bit looking forward. So I think translation of the various initiatives of the government into actual hiring trends on the ground is going to take a little longer, and especially so in the manufacturing sector.
Okay, can you break this demand up in terms of, the ones coming from tier 2 and tier 3 cities and how it really compares with your metros?
So if you look at it historically, tier 2, tier 3 has always been a hunting ground for corporates, and labor migration had to happen on a continuous basis. But I think what we are really looking at now, especially with the sectoral growth happening across FMCG, telecom, e-commerce and all of that, and if you look at it from a functional role perspective, it's largely sales, customer support and logistics. These are employment opportunities that effectively play to tier 2, tier 3 cities. So from that perspective, I think the next round of employment opportunities and growth that is happening while continue in tier 1 is also spreading itself into tier 2 and tier 3 locations.
A lot of the entrepreneurs, Ashok, who write in or call us on our daily show, ask us how they can really go about hiring the right talent at a cost that makes sense for smaller companies, for MSME as well as SME companies. What advice would you have to give them, both in terms of how much they should be spending and also in terms of how they should really go about the entire hiring process and also retaining process?
I think what one needs to look at is really the stage of the company, the role responsibility of the individuals. It's not necessarily paying, a big ticket amount necessarily makes the person right for the organization at a point in time. So I think it's about getting the fit of the person right at a cost that doesn't break the bank for the company, and evolving the aspect of the role and the individual in the organization over a period of time. Obviously, some people scale with the organization's growth, some don't, which is really where lateral hiring happens. So I think when we look at it as a match of cost to individuals, it is really about what do you expect the individual to contribute? Is he, she able to contribute towards that? And is that going to effectively be treated as an investment to the future in terms of a payback, or is it going to be a sunk cost? So I think getting the right people at any point in time at a cost is contextual for the organization and should effectively be focused on getting a return on the same over a period of time.
One part of the people cost, of course, is hiring, and the other part is training. What advice would you have for the viewers of this show in terms of how crucial A, it's going to be to spend money on hiring for MSMEs, and B, how much of an outlay they should have on this and how companies can really do it in a cost-effective manner?
So the reality effectively with the education system in India is that it's not preparing kids for the job market. So they're not coming out with the skills that the industries are seeking, by virtue of which the aspect of a reality to companies is that they're going to have to manufacture the talent that they want, which is really your question about having to engage in training and spend on training, because people are not having the skill sets that the companies or the industries want. So I think whether it is induction training, whether it's refresher training, whether it is an element of reskilling of individuals, it's going to happen or going to have to happen from a company's perspective on a continuous basis. Now, what percentage, what amount of time, or how it gets done is really taken at the stage of the company that one is at, and one has to just ensure that it doesn't break the bank. But as long as it is effectively viewed as contributing to the growth of the organization, towards the objectives of performance of the individuals, training is an investment that companies should make on. There's no right answer to the quantum to be spent, but I think it's a function that organizations kind of find balance at through trial and error.
Let's talk about your own company. What are some of the future plans that you could share with us in the short to medium term?
Obviously, we have by virtue of the industry space that we occupy, we have a wide product portfolio. The 3E that we encompass of employment, employability, education is a large industry space with a huge opportunity. We've played to that for the last 12 years, and I think we will continue to stay true to that course. Our aspiration of continuing to be a Mr. Miss India on this industry space is really where we will continue to focus our energies on. Medium term, short term, long term, we will stay true to that course.
Well, with that, it's a wrap for tonight on this episode of Leaders of Tomorrow. We'd love to hear from you. Do write to us at leadersoftomorrow@timesgroup.com. You can reach us on social media using the hashtag LOT or call us on the number flashing below on your screens. Thanks for watching.